Hey guys, so let's go over the price action on the 20th of June, Friday, to see what inspires. And we'll go over EU price action for London and New York both. So let's get to it. What do I see here when walking in, or at least pre-London? So the first thing I obviously notice is this giant big candle. Obviously, this is pre-London open. But if I am at the charts and I am looking at candles such as this, it will definitely pique my interest, like what is going on, right? So it's not that I trade strictly between the London open and close. I might trade one candle after, one candle before, and if this type of candle is there, and if I am at the charts, then for sure I'm looking at potential setup over here. But more likely than not, I'm probably not at the charts at this time. So just to go over what the entries look like, the first thing is what we do is this point here is the start of the new candle. What do? I mark my zone. So this would be my first zone here as such, and then this would be my second zone here, right? So I want to see a reaction from either one of them. And you see that there is a nice overlapping reaction from both. So my top also got mitigated. So let's put it this way. See, my top got mitigated. So anyways, where do we have our strong liquidity? Our strong liquidity is actually twice. So this high broke this low and then got swept. So that would be my liquidity right here. And then my next liquidity would be right below that. So if you guys can see, this high broke this low and then got swept. So let's put that over here. So we have two liquidity points. We have two liquidity points here. And my trade plan says that we enter after the mitigation of a zone as a sell stop at the bottom side, right? So we put a sell stop entry over here. I look at my pips, that's 2.7. I'm not doing that, so might as well cover the whole deal. And this actually does run to a 2-hour trade, not bad. Pre-London open and fairly quick, right? So where is my next setup? My next setup is this giant bullish candle right here, right? And thinking that, so basically it starts at this point in time, this box here. So price aggressively moved up. Obviously, it's breaking structure to the top side. There is definitely strong liquidity taken at this point, right? Right there. But the problem is that where is this reacting from? Yes, there is a zone here. How do I pull this out? There is a zone here, but it swept that zone, right? So this interaction between sellers and buyers, where buyers took over, the first wick was perfect, right? But since it broke to the bottom side of it, I removed my entry from this, and then I placed my entry at the top of this wick. But then it broke my zone. So once the zone is broken, then I'm done. I'm not interested in that trade anymore, right? Even though this played out nicely, but again, you're stacking probabilities on your side. I always ask myself, what is the price reacting to on the left-hand side? That is just one added mandatory confluence for me that I need to know. If this candle was maybe a little longer, right? Not a short body, but a little longer body, then let's say if it had started somewhere, stopped over here, then I would have taken that and I would have taken the body of this candle, right? So if it had stopped strong over there and then it would have continued, I would have definitely been in the trade. But this one does not fill me with a lot of confidence. So let's move on. What happens next? We look at this candle. It's breaking structure to the left side. It is still all upwards. Do we get a trade over here? It's the same story, guys. So this is the liquidity grab, right? Template, 1 minute trade. What is the price reacting to? Nothing. Do I get a strong reaction? Yes, I do. Are you willing to take this trade? It was a break-even trade, this one right here. But did this candle have an OFC change? It did not, right? So OFC for me would be this: if this bullish candle that I'm placing my trade on, let's get rid of this. If this bullish candle broke the top of this wick, that would have been an OFC change and I would have entered there. Even though I would have lost, even though maybe a break even, but I would have done that. In the case before, there was no OFC change. This was a big OFC change, but that's a massive candle to get directly involved as a buy stop on this. So if this candle had been over here, breaking multiple highs to the top side, yes. This candle did not break anything to the top side. It's just efficient price action, even though it's going on the flip side, but nothing happened here. So I'm not interested at this point in time, right? The next thing I can do is if there is buyer-seller interaction, but if you look at it this way, these would be the wicks that is doing the buyer-seller interaction, right? Right there. But I would have had to see this break, but this never broke the top side, right? So anyways, that is not a trade for me. Moving on, there is nothing much here. I'm not interested in anything. The one thing that I was interested in this candle is because it swept the previous low and then it closed bullish. And let me mark that for you, and let's look at the charts then. So let me mark that there and look at the charts. So what do we have here? So price is taking the low over here and it's moving to the top side. By the time the new candle starts printing, without giving us anything, it just swept up, right? It just ran. So there is absolutely no opportunity for me to get involved here. So that is gone. The next candle, the big massive one, I was like, yes, I have a chance here now. But the chance is that my zone did not get mitigated at all. There was no liquidity that was taken. And, I mean, the whole thing would have been my zone. Yeah, because it was sell to buy. There was, you can argue, there was obviously liquidity taken right here. So this low, my bad, yeah. This low broke that high and then got swept. There was definitely liquidity taken. And you could have entered long on the top side over here. But do you want to enter on a 2.1 pip? So I put it over here as a 4.5 pip, and then you make a 2R. I was not involved in this trade, but if you covered that zone, I would have liked further if this liquidity would have been taken and we mitigated this zone. It would have been a much higher probability trade for me. But just to make sure that we have our entries proper, that is what we do. We have this sell to buy, and then we place the stop order at the top of the thing the minute it mitigates, and we move on. If the next candle had broken below, I would have deleted this, and the buy stop would have been on the top of this candle, as long as it's going down and this zone is holding. All right, so that will be another trade. Let's move on, and that's pretty much it, and there is not much going on after that. On the flip side, let's go to New York. What is going on in New York? Oh my. So this big candle is what I'm looking at, right? Massive candle. Do I get a trading opportunity at that candle? Of course I do. So you have a clear liquidity sweep right there. So 1 minute candle, that would have been my zone that I would have been interested in. I could have placed the trade over here, but the bottom broke first, so that changed my trade to the buy stop of the next following candle, and then cover my bottom of the range, because this is a massive range. It could definitely come below and take me out. So that was that. I did not think I would have made 2R on this one because it came all the way down. But it did give me a 1.6, at which point I would have been a break even over here. All right, so let's move on to see what's the next trade. And the next trade is right here. So I'm looking at this large bearish candle at this point. What does the large bearish candle tell me? This right here. And where is the trade at? And this is a typical textbook trade, right? So you have a clear pullback, clear push away from it. You have clear liquidity taken. This high broke this low, and then it got swept. You have a clear zone over here, and in this zone price went all the way up and then had a massive reaction. So this is efficient price action. I always say this, but there is something to be said about a pullback, because if you look within this 1 minute trend, right? If you look at each candle in here, that is a micro trend in there, right? So we had a pull up, pull down, right? It opened up here, pull down, pull up, and closed there, and closed, and then had a pull down, right? So this is a pullback. So if it's a bullish candle, it's a pullback. But again, If this was a genuine pullback, which I could identify like this, would have been ideal. So what do? I said, let me wait to see if this zone is holding. And look at that. This zone is holding fantastically. It broke all this way to the bottom side. It is definitely an OFC change, and it is a strong bearish candle. I would 100 times out of 100 times would place a sell stop over here and then cover my zone at the top side. And look at that. It was a beautiful, beautiful trade. It went all the way down now to 38.9 pips, man. That's a 6-hour trade right there. We leave it at that, and that is something that I would not have left it over here on this point. The 2-hour, 3-hour max is enough for me. But for sake of curiosity, let's look at these little indecision candles, right? So if I were to draw a case over here, and the reason why I'm drawing this is because this wick has broken the bottom side of this indecision candle wick. Yes, so let me pull this on the side also. This wick here, oh my goodness, this wick got broken by this wick, so the structure is shifting to the downside, right? This is right here, the zone that I'm interested in, this box right here. So look at it, what happened. High, low, high, low, high, low, had a massive reaction to this side, high, low, did not break this high, this low is weak, low, so now we are building that smaller internal structure, right? So when price came into this point in time, I did not look at this trade, but where are my zones? My zones are clearly marked here. That is the buy to the sell, and then I could have easily done this as well because there was mitigation over here. Where is liquidity? On this zone. So let me take this zone, this box out. Do you see liquidity anywhere? This high should have broken this low. It did, but never got swept. So this is in the following candle. And there is no other liquidity, basically. It's all efficient price action. So what is my next step? My next step is to see if the price is reacting over here. Sorry, if I have a big solid reaction candle. I would have liked it if it was a solid reaction candle, but again, I don't trade reaction candles. I need to have some level of liquidity. I'm sorry, not some level of liquidity, but liquidity taken to trade the reaction candle. So the next step I do is supply and demand. Supply and demand is where this would be the zone that price is reacting to. I can go down over here up to this point. That would be the zone that price is reacting to. It is pulled out from there. So my next thing would be what? That if price is breaking the low side after the reaction, right? So it pulled, it reacted to this point, the top of this guy. So if this low goes, then it's going to the downside. But if this low is strong, it's printing a higher high, right? So I want to see between supply and demand, who wins, who has more orders, right? My narrative is that I want to trade bearish. So you could have easily put a buy stop at the top of this and a stop loss behind this, right? Because it reacted from there. And if the price is going to the top side, but my bias is bearish, right? So imagine my bias was bullish. If this was breaking to the top side, price is going up. And I would have had a strong low here. But in this case, I'm a bearish bias. If price breaks to the downside from here, from this reaction, because this demand failed to put a higher high, if it breaks, it's going down. And I would have placed my stop at the top of this high, the strong high. And that was your, let's see, that was your easy trade at 2 hour. Okay? So what do we have? We have I had a break even 1, 2, 3, 4 hour in New York. And what do we have in London? Do we have a trade in London? We have a trade in London, but I would not have taken this 1, 2, 3, 4, 5, 6 hour in total, just to show you that it works. If you are taking, because this definitely is a zone and this is a zone. So it really matters up to you which one. This could have gone down, give us a false signal to the top side by breaking the previous candle's high, and we could have been triggered in, but then it would have been a fake out and it could have been reacting from this zone as well. This time it played out. So that's that, and there is no other orders over there. 6 hour for the day, just only you. Take care, guys. Bye now.